right, good morning, everyone. Buenos dias. I mean, why not Little Havana? Little Havana is the heart and soul of Miami. So it's a pleasure to be here. It's a pleasure to be here with you, Ricardo. I know we spoke about your really impressive background and all the things you've been doing with Goldman and Goldman's move of an incredible amount of resources. They moved, under your tenure, they moved their Latin American head of operations from New York to Miami. So we're thrilled to have the team come here and base their operations in the true capital and economic hub of the Americas. Let me start off by saying, why Miami? What brought you and your team down to Miami?
Well, first of all, thank you, Jeremy, for having me here, and thank you for all of you and for the Economic Club to invite me. It's great to be here with all of you and spend some time speaking about my experience, but also to hear from others. So thank you. I appreciate that. In terms of what you asked, Jeremy, why Miami is it's like, why not? It's like I can't believe more people aren't coming, which is like good and bad, I guess, because of the just the influx of people here. But when it comes to I've been involved in financial markets for 30 years, and specifically in emerging markets, and then Latin America has been a big part of that. If you're in financial markets and you're involved in Latin America, it's just all of you know this. I mean, you know this, Jeremy. It's a natural hub, and so predating my arrival, there's a few people here from Goldman, from the private wealth group. They were here. There's a gentleman named Robert Barlick who founded, who'd been here for a long time. There's 150 people here based in Miami, focused on private wealth for Southern Miami, of which about 20 are just for Latin America. So if you have any kind of bent in terms of either looking at financial markets into Latin America, or if you're involved with private wealth in obtaining the wealth of those that are in Latin America that want to invest here, this is a natural hub. There's another hub, of course, which is West Palm Beach, which is where we also have an office. Well, Goldman has an office, and I just recently retired. And I view that as, like, thinking about this is that's more like the view of those that are up there. It's more looking northward, looking north and looking towards the continent, as opposed to people that are here that you look south. So it's like any type of capital formation that involves Latin America is going to be here, and so you couple the financial markets piece and then just Miami and what a great city. I mean, Pamela was speaking about being here for 40 years. I was thinking I've only been here 2, and it's like a. But it's an amazing, it's like what you have seen the city, and what you, Jeremy, what you've seen has been must have been quite a journey to see the evolution of the city.
Well, as you know, and the people make the difference. It's the talent that are here from Miami, born and raised in Miami, or new Miamians who come in and integrate. It's really the people who make the difference. Mayor Schwarz talks about telling your story, sharing the Miami story, but also sharing the story of Miamians who were born and raised here, but also new Miamians. And you have a compelling story that I think the students here and investors would find amazing. Your story, you began. Where were you born?
I was born in a city called Gilroy, California, which is it's known to be the garlic capital of the world, in case you didn't know.
Yeah. And so your parents, originally, they were from Mexico?
They're from Mexico.
And so you grew up in California. You were a California guy. And you got interested in finance. Where do you find sort of your love of finance and business?
So I guess to kind of answer your question, Jeremy, so my parents came from Mexico. They came over in the 50s. They met in a border town called Reynosa, which is near Texas. And my mom was 16, my dad was 20. They got married in Texas, and then they were farm workers, and they traveled throughout the Northwest, and then settled in this small town called Gilroy, which is about 90 miles south of San Francisco. And then my dad became a butcher, bought a home in the city, and then I just, studied and liked to read and that kind of stuff. And then grew up, like I guess most people, first generation kids grow up. And I knew about my background, but I was, born in California and all that stuff. And then I went to UC Berkeley, which is 90 miles north of where I grew up. I went there on a field trip in 5th grade. And I saw what's called the Campanile. It's like this building there. And I remember telling myself, I'm going to go to school here. And then in my wisdom of applying to colleges, I only applied to one college because I had no idea what to do. I remember writing my letter in like this piece of paper, and I tore it out of the notebook, and then folded it and sent it in. And there was no plan B. It was like it was either that or I was going to go to the community college in the hometown. And my parents were proud of what I did or what I was doing, but they were not. And they pushed me and encouraged me, but it wasn't like there was like, hey, you should do this or you should do that. It was more like, just be happy, be a good person. And so kind of a long way of answering your question, but I went to school at Berkeley, then later I studied economics and sociology, and then later I got a fellowship to go to Columbia. I went to Columbia, I studied international banking and finance. From there, I was introduced actually through a friend who's now my wife, and to a bank, and then it called Manufacturers Hanover, and then they were super involved in emerging markets because back then, if you do the history of what happened in financial markets, the New York City banks were big lenders to Latin America. There was the oil, kind of the windfalls of the 80s, and so you had all this massive amount of money that was coming into the New York City banks from the oil monies from the sovereigns. But then in the wisdom of these Latin American sovereigns, they were making 3 times the amount of dollars, but they were borrowing 6 times. So then eventually they went bankrupt. And then when I came in 91, after going to graduate school, literally all of Latin America was in default, every single country.
Right.
And so then I was part of that process of people involved in emerging markets,
Wow.
cleaning up the sovereign balance sheets,
Wow.
educating investors. It was a lot of fun.
Yeah, no, it sounds like, you were sort of had the ground zero experience of restructuring sort of the banking, the debt, the sovereign debt, a lot of the financial issues. And obviously, you were fluent in both English and Spanish, and you understood the dynamics given the political background and the international business background. So you were probably an incredibly pivotal person in terms of how, on the private side, governments and the market interact.
Yeah, I would say because of maybe it was my background, maybe it was just being naive. I don't know, but I didn't. And I think for all of you that are students, don't let preconceived mechanisms of how to interact with markets or how to approach jobs or whatever process that's supposed to be an impediment, because there's always ways to get things done. And that's why I love my former employer, which I still revere highly. It's just about, and we've talked about this, like you have to just figure things out, just figure it out and do the right thing. And so back then, yeah, there was, I was 28 years old, and I was sitting down with Pedro Aspe, which is the central bank governor of Mexico and finance minister, depending on the different terms. And I was just there. I was like a kid, and I was with these big investors, and they were figuring it out, and I was there absorbing and listening, and then pretty soon they became clients, and then life just kind of took on a different way of thinking.
Great.
It's like financial markets to me are very fluid. Things that are really, you think is going to happen for sure, it's going to happen. It doesn't happen. Or like if you go back yet last year, we were going to have a recession, 100%. It's going to happen. Rates are high, boom, it's going to happen. It didn't happen. This year, oh well, for sure there's not going to be a recession. Who knows? I don't know. Maybe there is. So it's like back then with all these different sovereigns, there was the world was broken, nothing was going to change. but yet people figured out a way to fix it. And so I was lucky enough to be part of that process.
So in between this story, your friend, who's now your wife, you obviously become more than friends. You get married.
Plus 3 kids later.
3 kids later, and your 3 children. You and your wife have come down. You're now in Hallandale Beach. Is that right? Or
Sunny Isles Beach.
Sunny Isle. Okay. And you love Miami. You and your wife love Miami. You have 3 children. Aren't they involved in financial services right now as well?
So I have a 25-year-old daughter. She also went to Cal, and then she works at Goldman. In like what's called prime brokerage, it's like the hedge fund services business. And then I have a son who goes to University of Miami. He's now in Rome on a study abroad program. And then we have a daughter, soon to be 17, and she goes to a boarding school.
Wow. Well, and they love Miami.
And they all love Miami. It's how can you not? I mean, it's like you were asking before like about how the attraction. You and I mentioned this to you. You were very welcoming to me when I first came here, and I got to meet. I think within the first week or 2, we had lunch. We sat down with the mayor, and people like you, Jeremy, made it a very easy transition.
Well, we're thrilled that you're here, and the fact that you've been dealing with all these things. I mean, just for the sake of our audience, obviously Latin America is in a very dynamic place right now. And we spoke beforehand about this panel, about talking about sort of where it is right now and unpacking the dynamics that you're observing on the private side and the public side. Where do you think, we've had, in this next year, not just the United States, but our neighbors to the south are going to have pivotal elections. They are already dealing with really different, I'm not going to use the word weird, but just non-conventional macroeconomic situations. Where do you think Latin America is right now? And can we touch on really sort of the big 3 economies? Mexico, Brazil. We should talk about Argentina. And then obviously Colombia and Venezuela. There is a very unique political dynamic that impacts the economic dynamic as well as the oil dynamics, the energy dynamics. So where is Latin America right now?
Yeah. So I think to understand 24, we should look back at a year to 23, at the beginning of 23. And at the beginning of 23, it was the prognostication of economists, including me, was that there would be really a slow growth and that you'd have a very difficult year, particularly in Brazil. You had a new president, President Lula. You had very high rates. They peaked at 13.75%. You had high inflation. It was expected that President Lula would be quite loose in terms of spending. That they were running a fiscal on the primary surplus side, which is basically the amount of money that you save to be able to pay down your debt, was going to erode and go away. And then you had what happened in their January 6th version. So it was if you go back even a year ago, around this time, he was attacking the central bank.
Right.
He was attacking Roberto Campos, and then Campos had to come out. Governor Campos had to come out with a FT article, an op-ed, stating why he was keeping rates high, why it was important. And so it was a year ago today, it was like, what's going to happen? And then AMLO was attacking the electricity sector with CFE. Basically, if you were a producer of energy at below CFE rates, you were seen as you're not seen as a good citizen of the country, because you were not producing rates producing electricity at levels that were consistent with the country. So it was just really inconsistent messaging. And if you look at now, what happened, it was quite remarkable. Latin America has been really resilient, and so you had growth of around 3% overall for the region, 3.4% give or take in Mexico, although it slowed down a bit in Q4, like 3% in Brazil, really unexpected. You had concerns in Colombia, Peru, Chile, that were very legitimate. The constitution was being revised in Chile under Boric. Petro was being very, very aggressive. There was a lot of concerns. And then, so to answer your question, but now we're coming at a point now where you can argue like rates are very high.
Right.
So just this, so kind of stepping back, when inflation took off globally, Latin America was they were on it like immediately. Like Roberto Campos in Brazil just jacked up rates, went from 2% to 13.75%. Imagine that, just
13.75. Wow. Okay.
and Mexico peaked at 11 and a quarter, and so you had like just remarkable resiliency from central banks, which is something that we, if you're looking at financial markets, you should feel like these institutions are really doing the right job, and they did it before the U.S. did, well before the U.S. We were still going through our transitory phase here, and so now that's where you are now. Now,
Right.
This week alone, you had Brazil cut rates by 100 basis points. They're now at 11 and a quarter. You had, so they've cut a couple times. You had Chile cut 100 basis points. That's now at 7 and a quarter. And you had Colombia cut 50 basis points. And so they're still very high.
Right.
Inflation is coming down. It's going to stay high, but they're going to come down. So by the end of the year, Mexico should be at 9, Brazil should be at 9, Chile, which is inflation is really collapsing, should be like at maybe under 5. You'll hear more later from maybe from Tom or from others. But the point is that inflation is trending down. That's going to help in terms of growth. But you're coming from like a higher growth environment that's going to start to slow down a little bit is the view, because real rates are starting to bite now in the economy. But to answer your question about the three countries, you have stimulus coming in. So you have money being spent by the government in both Mexico and Brazil. Mexico is running a fiscal deficit to kind of stimulate a little bit, maybe to help out
Right.
the election in June. And then in Brazil, despite fiscal transfers to some of the kind of more kind of like basically to help out the people, that you still have it at the primary deficit should be, they're targeting 0.
Sure.
So balance sheets in the sovereign side, meaning the debt to GDP, is going to go up a little bit, but it's not such a concern. I mean, others should probably speak more about that. But this year should be a good year for LATAM, because even though growth could slow a little bit, there could be some good surprises. So like nearshoring in Mexico, you could get a really good harvest in Brazil, and then we can talk a little bit about Argentina. But that's a little bit more than that's different than numbers. It's more about politics.
Right. So it seems like, based on your comments, there obviously was a surge, an inflation surge, while we also had a commodity surge, because obviously the price of food went up, the price of energy went up, which helped Latin America in some respects. But the central banks in Brazil and in Mexico were very vigilant and got ahead of the inflation that they were seeing on the global markets.
That's right.
So now, continuing their vigilance, both the Central Bank of Mexico, the Central Bank of Brazil, are watching the inflation come down, but they're not holding off. They're not looking to hurt the economy, but they are keeping a very firm hand, while the government seems to be trying to sort of soften the impact of these rates rises in Brazil and Mexico. Now, in the case of Argentina, obviously, there's, Miami is a great sort of bellwether. We know what's going on in Latin America before the rest of the U.S. market does, and that's not anecdotal. There's micro data. Argentina has gone through and will likely to continue to go through a very difficult macroeconomic situation. Talk about that, because a year ago, obviously, the inflation rate was incredibly painful. I mean, the rate of inflation was 100%. Argentina, great talent, infrastructure, has a lot going for it, but it has had macroeconomic and financial problems. And can you just sort of give an overview of where the Argentine economy was last year, and where they have to go. Or there was an article with the Financial Times, I think a few days ago, with Milei, and they said to him, "Is there a plan B?" And he said, "There's no plan B. This is the only plan. This is the only option we have left." It almost sounded like Margaret Thatcher in the 70s with the British economy, where she said there is no other way.
Yeah.
What do you think?
So I would say in Argentina, the reason why there's probably, I think the comment no plan B, think of it as they borrowed, when President Macri came in, I guess now it's been 8 years. Well, that's not true. It was the beginning. Yeah, it was like 8 years ago. He followed what's called a gradualist approach, which means that you had imbalances, both you had your fiscal imbalances, you had a current account deficit, a capital account deficit. But the idea was everything was so messed up in terms of like statistics. You didn't know what real GDP was. You didn't know what inflation was. You just didn't know. And so he thought, okay, we came in. They brought in a good finance minister. You had the right team around him, and then the idea was let's back then they were defaulted on their debt. Let's clean up the default, and then from there we can start to fix our imbalances. And they did that day one. He's now the finance minister. His name is Luis Caputo. Came in and just immediately started engaging with the bondholders within, and this has been the issue for Argentina for a decade before that. I think within 2 months it was fixed. They got it done, and then that opened up the capital markets. Debt to GDP at that point was probably 20%, in that range. It was really low, and so there was an opportunity for them to get this right, but they took what's called the gradualist approach. So it was financing the imbalances via the capital markets, and the capital markets were open to the point where they even issued a 100-year bond because people were so receptive, but they just kept jacking up the sovereign balance sheet, keeping up, and then he didn't get the reforms done in time for the next congressional election, which was 2 years later. 18 months is when it really started the campaigning. It didn't get done, and then it got worse, and then it got worse. Then they eventually had to go to the IMF, and then it became what it is now. So where you are now with Milei is he's taking the opposite approach. He's doing shock therapy. He's like, we just got to just do it now because there's no time now. So within 2 days of him coming in, they devalued the currency. He sent an omnibus bill with 600 different line items in terms of like what to adjust for the economy.
Just for the sake of our audience, can you guys hear? Are you okay?
Yeah, okay.
So he is embracing shock therapy.
Just go for it.
Okay.
And so like and so then you've got those were the two, and then he immediately started to talk about basically going after subsidies. So think of it as last year growth was, it's hard to tell. I mean, Tommy would know more, but maybe negative 3% growth. I don't know. It's hard to
3% contraction.
When you don't know contraction, when you don't know the numbers, it's like kind of hard to say what is the number. And then this year it's supposed to contract again, but there is no plan B because there's no one else to borrow from. So like January 31st, the IMF gave them what should be close to the last tranche of money. It was like $4.7 billion. It's called the EFF, the Extended Fund Facility, and they're tapped out. Now whether the IMF will give them more, we'll see. But the IMF also said that they were encouraged by his initial approach. I think the words were something to the extent of like addressing the fiscal and imbalances or something like that. It was very, very well written. But then they also, what caught me, they said, we have never seen the imbalances of this magnitude. This is basically saying this is the worst it's ever been for Argentina, period, ever.
In the history of Argentina.
Yeah. That's basically what they said. So
we spoke briefly 2 days ago, and you said basically they've run out of people to borrow money from.
Yeah.
Okay.
And so what Milei is doing is, President Milei, what he's trying to do all at the same time, which is remarkable, is this bill, the devaluation, the going after the trade unions. I was in Argentina last week. We left on Wednesday, I think it was Wednesday. They had the largest, massive protests. It's never happened so quickly, where basically you couldn't travel, everything was shut down. So you have, and it's interesting, I was looking at this, there's the trade unions, the trade bosses, so that they're very, very entrenched. There's 3 trade union bosses, leaders, if you will, that have been in power for over 50 years. There's 10 bosses that have been entrenched, have led their unions for over 30 years. One of those that have been for the 30 years they get the money from, they're very powerful. So they own, to the point where some of them own their own soccer clubs, they have their own kind of businesses, their children are in Congress. It's like a complete entrenched society. And so you have Milei is going after them. He's going after the corporate subsidies where you get certain tax benefits or FX preferential treatment if you're an agricultural producer. He's saying we can't do that. He's going after the subsidies that are like Peronism was taken over by like a quote unquote socialism, if you will, where they're just giving subsidies to people. But yet the inflation rate, as you said, it's actually now over 200%, and Goldman thinks that it's going to peak at 300% in April.
So by April, just to sort of underline this, 300% inflation rate, Argentina. And right now, somewhere in 200%.
Yeah.
I mean, that's astonishing.
Yeah. And but it's all about stabilizing. So it means that maybe Tom can speak more about this later, but is that it's stabilizing on nominal terms, meaning like you just have to like put the brake. And how do you do that? He talked about dollarization. You can't do that if there's no dollars. And so, it's really hard to do. And so it's the right concept, if you will, but you have to what you need to do is you need to like stop. And how do you stop? And the way he's trying to do it is by saying we're going to slash the federal agencies. So you're going to like less money being spent. Like he said, 50% cut in the federal agencies.
Right.
He's trying to do a lot at once, and what I guess the answer is going to be is just watch to see what Congress does. If they allow some of these, he also asked for a 2-year decree, like to rule by decree, and so like if he gets some of that stuff in the next few months, then things can go right or could go right. But he's assembled the right team. His rhetoric has come down. He's saying the right things. He went to the IMF. He went to Davos, said the right things. There's a lot of hope. IMF is behind him, but it's going to get worse before it gets better.
Wow. Okay. And we mentioned Mexico. Obviously, Mexico, our neighbor to the south, massive trading partner for the United States. Since the 1990s, the United States, obviously, many of our corporations have put a lot of their manufacturing in the Pacific Rim, most notably China. During COVID, many corporations, not just American corporations, but global corporations, realized that placing all of your manufacturing facilities or offshoring them to China created a whole host of other problems, especially when it locked down. And then the idea was, well, look, we have our consumer market is based in the United States or Europe or other pockets of the world economy. Why not have our manufacturing facilities closer to where we have our customers? And why not invest in middle range economies that are on the precipice of becoming fully developed economies, and basically give the business to your neighbor who can help you and who's closer to you than giving the business to another location halfway around the world, which on the front end has lower costs, but on the back end there's far more risk and far more delays. In the case of Mexico, they're closer, so on the front end the cost point might be higher in relative terms, but there are a lot of other costs that you don't have to deal with. You know, the logistics is a no-brainer, the relationships, the proximity, the history. So what do you think about Mexico right now? You know, in terms of not just the politics, but they have an election in 2024, but their economy and how that's going to impact the United States.
So if you travel in Latin America, they all have this Mexico envy in a way. Like it's kind of a, and when I say that, it's really about the economic opportunity set in that sense, because it's really it's Mexico's moment in a lot of ways. I mean, Brazil had an amazing year. They had a trade surplus of $100 billion last year, never been done before. Actually, that was by including January, so on a rolling 12-month basis. But that was based on agriculture and energy exports. And so, like, can they do it again? I don't know. Mexico is like, but just has to just be there, and then they can just benefit from what is happening with nearshoring. But that said, what they're not doing, I mean, and President AMLO did the right thing. Like from a fiscal side, although it was very difficult at the time, he wasn't profligate. He was contained in his spending. The balance sheet's very low. It's still 40-odd% in terms of debt to GDP. Depends if you include Pemex or not. But it's well positioned in terms of its ability to spend if it needs to. It's got rates that are somewhat still high but trending lower. It's got the nearshoring opportunities. It's got something that no one else really has of this magnitude, which is remittances. They're receiving over now, it's like 60, the number is greater than 60, maybe 62 billion a year on a rolling basis per year from nationals sending dollars home. It's an amazing amount of money.
Right, and many of their citizens are based in the United States. So if you look at the remittance as basically a form of investment, you know, assume that the Mexican economy is integrated to parts of the U.S. economy. Energy, perfect example, and obviously trade. The tariffs are through USMCA and prior agreements. So in a way, they're receiving a huge amount of remittances, obviously from the U.S. That's investment in one form or another, consumables, capital investments. Then there's the energy prices, which are going up, and obviously the energy market in Mexico is a big part of their economy. What else is going on that we could sort of look at, that students and investors here could sort of take away?
So in energy, what Mexico has to do is focus from refining to investment and extraction, and then the bottlenecks are water infrastructure, which there hasn't been enough investment, particularly in the South. Energy transmission, I mentioned CFE earlier. There's not enough investment in energy transmission, and that's because it's a monopoly. And then the other aspect is just generally energy overall, like gas. There isn't enough investments. There isn't enough. It's stifled. The idea, the hope is that the new president in June, if it's President Sheinbaum, that she isn't hindered with ideological constraints to be able to say, okay, we need to clean up Pemex. We need to allow competition in electricity. We need to invest in ports. We need to allow foreigners to invest. So if that's the case, then FDI should go up. And so if you're from here looking over there, what can I do in Mexico? The financial side, that we talked about this, finance in Mexico, like if you look at the stock market, it's been stagnant for years. It's actually been negative. The float's gone down because the families are taking their public float and taking it back. But the idea is that the financial markets could be unlocked. And so if they could make some reforms there, then I think that you could see quite a bit of opening in terms of capital markets. The pension fund system in Mexico is a really remarkable pension fund system. It's the most dynamic. It's got right now, roughly in dollar terms, about $340 billion. They passed reforms in February of 23 that'll allow. This is under President AMLO, where employers are contributing more money to the workers' remittances. The workers' pensions, and and that's going to double to 700 billion. And so what does that mean? It means if you're looking to do something there, if you're in finance, there's going to be opportunities in Mexico, broadly speaking.
So now for people in Miami, that's great because our workforce is incredibly educated, incredibly entrepreneurial, and multilingual, and has all of the positioning and the American business acumen. We have 5 minutes left.
Okay.
Let's just do a quick lightning round.
Yeah.
Your prognosis, we've already sort of gone through Mexico. Your prognosis for Brazil, Colombia, Venezuela, and just any larger trends that we should look out. So for Brazil, where do you think we're headed in the next year?
Brazil, I think it should be pretty much the same. We should grow, they should grow maybe let's say in a 2% handle, rates will be, I mentioned, closer to 9.25%. Let's say 9 by the end of the year. You're going to get, President Lula, you shouldn't get a lot of noise around that. It should be kind of steady as she goes,
right.
I think. And then they could have the windfall of agriculture. They have the benefit of being, you said it at the beginning, they're not, you have a war in Europe. You have constraints on agriculture exports as a result.
Right.
That could benefit Brazil. You have energy that's needed. Brazil has that. And so it could be a good year for Brazil.
Colombia?
Colombia, it's kind of a rebound of last year, so you should hopefully grow this year. Colombia is still, the currency should do better because just the noise around the politics should subside, and the FDI should maybe come in a bit more. But more importantly, you're not going to get people that are in Colombia trying to get out.
Right.
Hopefully that calms down.
Venezuela?
Venezuela, I think of that as just binary in terms of, does President Maduro, does he allow the opposition to be part of the election? It looks like it's no. It's political. Does President Biden come back and do something? Probably not. If there is a Trump presidency or a Republican presidency, it's going to get difficult for Maduro.
Well, it looks like 2024 is going to be a very interesting year for all of the Americas, North, South, East, and West. Thank you so much for your time. I'm sure many people will want to continue the conversation when we wrap up. But thank you again for joining us and for starting this Miami Economic Conference off. And we look forward to future conversations.
Yeah, thank you as well.
Thank you, everyone.